Hey, have you noticed something strange is happening these days in the Indian stock market? Especially all the indexes, something like Nifty, Bank Nifty, SENSEX. Those are trading normally till 350. And suddenly around the market closing, boom, Nifty is sharply jumping upside or maybe it is coming downside. Sometimes the move is so sudden and sometimes the move is of 100 points, 200 points, 500 points in fact in Bank Nifty and inside SENSEX. So what is happening exactly? Does somebody suddenly buy entire market itself, or there is some technical problem, or is there a completely new mechanism which is working behind the scene? The answer is CAS, closing auction session. In next few minutes, I will be explaining you CAS with some of the very live example, simple live examples, along with some of the simulator which we are going to discuss. And I will be sharing the simulator link in the description section, so that you can play around and understand how CAS works. And once you understand this, you will be able to get the idea what that particular 330 move is all about. Whether it is a strange, I know it is really strange, but it will make more sense if you will go through the simulator and if you go through this particular video. And if you have not liked, shared, and subscribed to this particular channel, I highly recommend you to do that, because you will be able to come to know about these important topics if you press on the bell button. Okay, so let's understand we'll understand three important things in this particular video. First, how closing price we used to calculate earlier. Okay, the second thing which we are going to discuss is what changed after CAS, and the third and very important thing which we'll be discussing about the sudden jump in Nifty and Bank Nifty which happens exactly somewhere around 325 or maybe 330. If you observe what I'm saying here is, this is the old closing method. So let's think that any of the stock is being traded. So all the stocks, indexes, each and every component would be traded till 330, right? Suppose one of the stock which I picked right now is Reliance, just for the example purpose. So what is happening over there? Around 3 p.m., the price was 1400, 1,000 shares got traded. Similarly, 305, 2000, 310, 1500, and so on till 330. At 330, the trading price was 1412 and share traded was 1000. I'm just giving the example. These are not the real data. I'm just, for the illustration purpose, I'm using those, the number of shares traded. Now, if you observe strangely, what is happening? What is happening meaning here at 330, the price of Reliance was 1412 and 1000 shares were traded. But observe closely. What is the closing price? Closing price is not the last price when it was traded. The closing price is 1406.46. Now you might be wondering how this difference is. At 330, somebody told that you will be seeing that 330 price was 1412. But all of a sudden, the price is 1406 where the market is closing Reliance, especially end of the day. So basically, the thing is very simple. Internally, what happens? It will be using this VWAP method to calculate, which is nothing but volume weighted average price. To calculate the final 30 minutes of trading, what happens? Something like here 1400, 1404, 1402. And at the end, what it will do? It will use the VWAP methodology where price and quantity will be multiplied. And after multiplying price and quantity, we will come to know how many shares were traded, right? So how many shares were traded, that is the volume. And when we divide both of those, that is the time when we'll be coming to know about the official closing price of any of the stock. In this case, I'm talking about the Reliance. But what happened? A very simple way to explain this, is this is the old closing system. All the stocks were eligible till 330 to come up with this volume weighted closing price. So very important thing which I wanted to share with all of you is last price is not equal to the closing price. Why? Because we don't know at which price more shares were traded, and that will have the higher weightage, right? When you do those VWAP method. So now the very important thing, the change what happened recently. Okay, so the change is very simple. The technique which was used earlier was VWAP. But if you go to the new CAS method, which got introduced recently, which is completely different from how it used to be earlier. So the difference is going to be pretty simple. The CAS method is nothing but closing auction session, wherein all the derivative stocks, where all the stocks which are included in FNO will be traded only till 3. So this is the way how it happens. So 350 is the time when the normal trading of the stock will be stopped if it is from FNO. And after 315 to 320, this is called transition period. So transition period is the place where exchange will calculate the reference price for so that it will transit to CAS. Now 320 to 325 is the time when market and remit orders are entered by all the bidders who are there globally, right? It can be FII, DII, whoever wants to put the money in on that particular stock. It can be buying and selling. So people will be entering their order during 320 to 325. Okay. Now 325 is the time when auction moves to the next level, wherein the order entry and all the other approximation will be calculated, and this can be random, right? Pretty random. Why? Because people can take any random price of that particular stock to buy or sell at this particular moment around 325. Now, from 328 to 330 is the place where there will be some sort of relaxation period for 2 minutes, and from 330 to 335, that is the time when order is matched. Order is matched means exchange will try to match the order from buyers and sellers. Let's think that if any of the stock is at 1400 rupees, so there are so many people who are buyers at 1400, who are sellers at 1400, so they will be matching those orders. So the objective is very simple: to discover the equilibrium price where the maximum executable quantities can be matched. Okay, so now if let's talk about the example how this matching is happening, this final equilibrium price is happening. So the example is going to be like this. So let's think that I talk about the example as we have discussed from the old video, or maybe old example. So if you see here, let's see Reliance is one of the stock which is being traded. At 3 o'clock, 1402, 1403, 1404, and so on. 1407 is the place when 330, 315 is the time when it got closed. Okay. So now what will happen? Let's think that the same thing happened, and many of the bidders have come into picture, and they are trying to buy and sell Reliance during the auction period. So suppose these are the prices which are available in the auction, and the if you try to match over there, this is the quantity for buying and this is the quantity for selling, right? Suppose let's think that 1402 is having 1000 buyers and 200 sellers. Similarly, 1403 is having 900 buyers, 350 sellers. 750, 500, 650, 650, 450, 800, and 250, and 1000. Now, how exchange will decide the equilibrium price? So here, if you observe closely, what is happening? 1402 is the price where there is no equilibrium. Why? Because too many buyers are there and very less sellers are there. Similarly, if you look into 1403, 900 buyers, again, it is not an equilibrium price. Why? Because 900 buyers and 350 sellers are there. Similarly, if you go to 1404, gap is narrowing. However, here the gap is narrowing for 750 and 500. But again, still there is some sort of gap. Now, if you observe closely, what happened at 1405? What happened is the demand and supply is matching, wherein 650 buyers and 60 sellers are there. And if you go to the below price 1406, again 450 buyers and 800, there is mismatch between the quantity of buyers and sellers. Similarly, 1407, 250 and 1000, so there is a huge gap between the buyers and sellers, where sellers are more over here. So the thing over here is, if you observe, 1405 is having 650 as a quantity as a buyer and 650 as a seller. So this is the place where the equilibrium matching is happening. So this particular price will be called as a equilibrium price. That means 650 shares are both the sides, and this is the best possible, the closing price what is being shown currently as part of the CAS system. So basically, very simple thing. What is the CAS equivalent price? It is nothing but the largest executable quantity which can be matched between buyers and sellers, and at which single price we bring the maximum buying and selling interest together, and this particular price is called equivalent price. Now, very important question. Many of the people usually ask that, does this CAS is available for all the stocks? So the answer is very simple. No. In the first phase, CAS is applied only to the stocks where derivatives contracts are available. Something like FNO stocks are being treated for CAS. So imagine if there are two stocks. ABC Bank, it is an FNO stock. It will be continuously being traded till 315, and it will enter into CAS at 315, and then the mechanism will start, which we have discussed a little bit earlier, wherein the CAS will come into picture and closing price will be decided. But if any of the stock, maybe let's think that XYZ, which is a non-CAS stock, means non-FNO stocks, then it will be keep on trading till 350, and it is not eligible for CAS. It will have the normal cash market closing will be applied over here. Okay. Now let's understand the very important point, why all the index are jumping crazily during the closing market. Okay. So suppose I'll take the example of Nifty. You can carry forward this particular the concept to other index also, Bank Nifty or SENSEX, whichever you will think of. So let's understand why Nifty is jumping crazy during the end of the market. Imagine Nifty is having 4 stocks. I'm just talking about from the hypothetical perspective. Let's think that Nifty has got 4 stocks or maybe 5 stocks. What are the 5 stocks? Reliance, HDFC Bank. These are the heavyweights. Something like ICICI Bank, Infosys, and TCS. Okay. Let's say Nifty is at 14,500. 14,500 here, 14,500 and 315. Okay. Now what happened, as we discussed, 315 the time when CAS will begin. Suppose Reliance was at 1400. Let's say that Reliance was at 1400 at this particular point. 1400 was the price. And what happened? The CAS closing is 1420. Now HDFC, let's think that it moved from 1000 to 1050. Suppose ICICI Bank moved from 1200 to 1212. Infosys from 1500, very small movement, 49 and 98. And TCS, what happened? 3000 to 3005. During the CAS, the auction which happened during that time, this movement was. Now what happened? Because Nifty is having all these stocks, So the change in these stocks will automatically impact the Nifty price. And it appears that Nifty jumped suddenly by 100 and 150 points or 120 points, but it is not happening like this. If you see here, I'll just show you. This is how it happened. Let's think that 315 is the time when Nifty was trading at 24,500, and suddenly the CAS will start. When CAS will start, all the heavyweights, whatever the stocks are there, those will be start getting traded, or maybe those will be auctioned, and based on that, the closing price will be decided on the basis of CS mechanism. Now, automatically what happened when I run it, this is the way how it happens. So automatically you will be able to see sudden move of 120, 150 rupees inside Nifty. Why? Because the auction happened and the price of the constituent stocks inside Nifty got changed when Nifty was still being seen by you. Okay, so whenever you see trends moving near to the close, don't immediately think that it is a fake move. Okay, or don't even think that suddenly everybody become bullish or everybody become bearish because it came down. So it is absolutely very important thing. It is because of the CAS price discovery. This is the change. Now, if you will be using this particular simulator, let's think that the currently the market is heavy selling. So when we have the heavy selling, what happened? Let's suppose during the CAS, all the stocks were sold drastically. That means the closing price was not the 315 price. Then what happened? This is the way how the Nifty will look like. So suddenly you will be able to see some sudden downside. Why? Because constituent stocks itself got changed. The price of those got changed. Now, if you go and see the older method, what used to happen? Older method used to go smoothly one by one. Why? Because at the 330 last all 30 minutes, VWAP, the average price, almost average price, volume weighted average price used to calculate, and you come to know about the final price. But now what is happening? The new one is absolutely based on the CAS, which happened with individual stocks. So now let's suppose the heavy buying happened on those stocks. Then automatically what happened when I run it, you will be able to see sudden jump in Nifty or Bank Nifty or whichever the index you are tracking. Now suppose if market is balanced, in that case you will not see much upside, slightly small point of 4 or 5. Now in case the CAS happened where a lot of heavy sellings happened, then what happened? You will be able to see it going down. So basically it completely depends upon the CAS which happened for the individual stocks, how those has behaved. Accordingly it will be changing. So if it is balanced market, there is not much change on the 315 closing and the CS closing, the Nifty, okay, or maybe any of the index. So if you look into the differentiate between the old method and new method, how it looks like is, old method, normal market will be trading till 330, but new method, what will happen? CAS will start at 315 for FNO stocks. Closing price is based on the previous closing methodology, which is nothing but 30 minutes VWAP. But currently what is happening? Orders are collected on the auction window. Then what happens? Equilibrium price is discovered, and then the index is calculated based on the constituent closing price. So very, very important learning, which we are going to discuss right now. But before jumping into the important learning, let's understand how much of this movement comes from the normal continuous trading and how much comes from the CS price discovery, because these are not necessarily the same type of price movement. And you remember very important thing, Nifty itself is an index, and all value depends upon the constituent index, how those are moving. And if heavyweight will move too much up and down, then obviously CS price will also come down or upside. One more thing, this does not mean that CAS closing price is fake. The CS closing price is not a fake price. It is an official market discovery closing price. CS has been introduced to create the dedicated closing price discovery mechanism. However, currently when we are starting this journey, Indian market is starting this journey, so we are able to see the sudden spike up and down, but globally it has been recognized this system is being used where more volumes, more people will participate in the auction. Then what happens? The price discovery will be really well. But as a student of market, what we got to do is we got to understand this, how the price is being discovered. And very important thing, I personally believe that with time, the too much up and too much down will be reduced. Why? Because more and more people will, or more and more, big institutes, something like FII, or maybe some mutual funds, or maybe some of the ETFs, or maybe all the whichever the index are there, who will be tracking the mutual fund, all will come and they are going to bid, right? So last 30 minutes, the VWAP mechanism will be used to non-FNO stocks, but still currently the FNO stocks will be going through the CAS eligible stocks, and the auction will start the way how we have discussed at 315. So very important thing, Nifty and other indexes can show a sudden up move near the closing. Why? Because the constituent itself is going to CS mechanism, and it is coming up with the new price from the price discovery mechanism, which is called equilibrium price discovery mechanism. So in this example, what we have done is we have understood the way how it moves. It used to move earlier, how it is moving right now. So if you have liked this particular video, please give me a thumbs up, like this video, and share this video to other people so that they can understand. And please subscribe to this channel if you have not subscribed. So let's go ahead with the next video. Till the time, happy investment, happy trading, happy learning, and happy traders team. Thank you so much.